Hey traders, in today's video, we're going to talk about why this can be a very dangerous time to be a trader. We're also going to do some top-down analysis on the euro dollar and show you what's on my radar for the upcoming week. Almost forgot. During the intro, do me a favor. If you're watching this on YouTube, go down to the bottom right and hit that like button. Also, give it a share. All right. Hey traders, my name is Akil Stokes and welcome to the Forex Market Preview. If this is your first time joining me, I am the Chief Currency Analyst and Head Trading Coach over at TradingPower.com. And this is a weekly video that I produce showing you what's on my radar for the upcoming week and also providing you with some educational content that will hopefully push you along that path to becoming an independent, consistently profitable trader. If you are one of the 77,000 plus subscribers here on YouTube, I just want to say I appreciate all your support. You do a great job of sharing this video, hitting that like button, and leaving some very positive and informative comments. And if you're not already, make sure you head over to our website, TradingPower.com, click on that Learn to Trade tab, and make sure you are on our email list. That way, you're the first to be informed about this video. You also get informed whenever we do any type of free live training events. For example, 2 weeks ago, we had the Keystone event, and I think this year we've done 4 of them already. So don't miss the next one. Get on that email list. We don't spam you. We only shoot out emails when there is something that you need to know about. Now, in this week's Forex Market Preview, we're going to take a look at the euro dollar and do some top-down analysis and show you what I'm looking for going into Monday's trading session. But I want to start off by explaining what I meant by this is potentially the most dangerous time to be a trader. Now, believe it or not, we are almost near the end of 2016. I know it came so quick. Another trading year is almost in the books. It's going to be November very shortly, which means we have 2 months left in the year and really about 4 or 5 good weeks of trading left. Now, typically at this point, a trader is in one of 2 areas. A, they've had a very good year. They've stuck to their plan. They've followed their rules. They've trusted the process, and their trading has yielded them a positive return. You're in that range of where you should be in with your results, and all you're saying to yourself is, don't mess it up. Don't do anything dumb. Don't blow it. Stick to the plan. Ride it out, and we'll end with a very profitable year. Unfortunately, and if you're like that, congratulations, tap yourself on the back for a good trading year up to this point. Unfortunately, the majority of you are not in that position. And I noticed because I've spoken to a handful of traders over the last couple of weeks who are kind of in a panic mode. They see that the year is ending. They're nowhere near where they want to be. Either they're slightly profitable, but they haven't met the big expectations that they set for themselves, or they're unfortunately at a point where their account right now is a lot smaller than what it was January 1, and they're trying to get it back. Either one of those situations, they're saying to themselves, hey, Akil, I've got 2 months left. How can I make up for all that I didn't do for the past 10 months? And that's a very dangerous position to be in. As traders, at least something that we preach here at Trading Power is process over outcome. We don't set any outcome-based goals. We don't have any quotas. We trust the process, and we know that if we consistently follow the process, it's going to provide us with the outcome that we need. Unfortunately, not everyone thinks that way, and when things don't go as planned, when your system isn't working, or I guess maybe it's not always the system, but the trader is sabotaging their system, causing it not to work, they feel the need to chase the numbers. And this is the part of this is the time of the year where traders start trying to do extra stuff. They start increasing their position size so they can get a bigger return. They start adding more pairs to their portfolio. That way they can have more opportunities. They start taking trades that they're not supposed to take, all in hopes of making that one big rush before the year ends and achieving their goals that way. And although it sounds good, unfortunately, that type of action usually has an opposite result. Typically when a trader adds more, whether it be portfolio size, trades taken, or position sizing, they end up losing more. They end up hurting themselves more than they help themselves. So if you're a trader that's in that position, if you feel you're at the point, and I've spoken to a lot of you over the last few weeks about this, if you feel you're at the point where you're getting frustrated, something big needs to happen in order for you to achieve your goals, here's what I want you to do. Stop trading right now. Just stop trading. Cut your losses for the year, right? There's no need to dig yourself deeper into a hole. Cut your losses. Say, this is it for the year. I'm going to dedicate the next 2 months to learning how to trade. So I'm going to go back to the drawing board. I'm going to go back to my notes or back to wherever you're going to get your content to learn how to trade. I'm going to go back to that source, and I'm really going to focus on learning how to trade, finding out what was wrong with my system or what was wrong with me that caused me to sabotage my system, and then find a solution on how to fix that. That way you can start 2017 fresh. Because again, if something if it's not working by now, something's wrong, right? And there's no point of dragging that out for another few months. Quit while you're ahead, save some money, refocus, and start fresh in 2017. No need to waste any more money. And again, do that by not only evaluating your system or your strategy, but evaluating yourself as well. That's the best advice I can give you. And again, I've worked with so many traders over my 5-year teaching career up to this point, and this is a common thing that we see around this time of the year all of the time. So that's the best advice I can give you. Now, heading to the charts, we're going to take a look at euro dollar. So let's get over there and I'll show you what is on my radar coming into this trading week. All right, so I want to start off by taking a really big bird's eye view look at the euro dollar. So I'm out here on the weekly chart. Now, I don't typically use the weekly chart in my analysis. The daily time frame is what I use as my higher time frame. But again, I think it's good to get perspective of what the euro has actually been doing. And really, over the past 2 years or so, the euro dollar has been in consolidation. This is something that we call a pennant pattern, where the market makes an impulsive move, and in this case, a swing high to swing low, followed by consolidation, essentially a triangle pattern. So again, a simple pattern formation called a pennant pattern. Now you can see that the move before this was a breakout from previous structure lows, so a breakout from previous structure support. So in the case of this pattern formation, this would be a bearish setup. This would be a bearish pennant. Typically with the pennant pattern, you look for a breakout in the same direction as the flagpole, which would be, again, this impulsive move, swing high to swing low. Now, that's not going to have much to do with my analysis as I go down time frames, but again, I think it's good to have that perspective of what's going on. And although markets move differently on different time frames, if you can align the same idea up, it gives you a little bit more confidence going into the trade. So if we go down to the daily next, you'll notice this, and this is the move that I was paying attention to. Although we're in consolidation, again, the market's just been going left and right. The most recent move was a break of previous structure support. You see a support level right down here and an even lower support level right down here. For you guys that have our DSR indicator, our dynamic support and resistance indicator, you probably have a big green box down here, which probably has a red interior now, meaning support was broken and now turns to resistance. Now, if I go through my IPDE process, and IPDE stands for identify, predict, decide, execute, I identify the lower low, lower close. That causes me to make a prediction that price action should continue lower. Now, if price action is going to continue lower, where is the next stopping point? And the next stopping point is going to be our next level of structure, which is right down here around 108.25. So it's not too far away, but this is a lot of room once you go down to your lower time frames, like a 4-hour or an hourly chart. So if my analysis tells me to think that the market's going to give us a continuation down after our last move, our last swing high to swing low, the next question is, how am I going to get involved? And what I want to do is I want to wait for the market to put in a retracement or a pullback, which is what it's doing right here. I want to be able to hop on the retracement in anticipation of the move lower. Now, a mistake that a lot of traders make, and this is something we talked about in the live room a lot this week, when you see stuff like this, a lot of traders will make the case and they'll say, okay, well, if you're making that prediction, Akil, how about, why don't you just sell right now? Just sell at market right now if you know the market's going to go down here. And here's the thing. We never know what the market's going to do. Again, these are predictions. One of the cardinal rules in trading that you'll learn either by listening to me or you'll learn it the hard way with valuable and expensive real-time lessons is that the market will do what it wants whenever it wants to. We never know what the market will do. All we can do is make predictions and put ourselves in the best possible positions to enter. So when we say that we're looking for a retracement, there are some scenarios where it's worth being aggressive. But in a case like this, where our next level of structure really isn't until up here, you certainly, in my opinion, obviously you guys can do whatever you want. This isn't trading advice, just my opinions on the market. In my opinion, you just don't want to blindly put on, my kid just woke up. You just don't want to blindly put on a sell order. You want to wait for some type of confirmation or something that meets your rules for engagement. Now, we can start breaking down this level, and I'll show you what I'm looking at here. We have two things. First, we have this nice wick right here from this candle. I forgot if this was news related or a Friday close, but I remember the market pushing up to this level and then getting sucked down and defeated. So if I'm looking for an area of potential structure, potential resistance, I'm looking right inside this zone. Again, this level, we can look left, structure leaves clues, but this level was respected before. There's a good chance that it will be respected again. I can also do something like this. I can go over to my Fibonacci retracement tool. I can identify our last swing high to swing low, our last impulse leg. We like to call these impulse legs sore thumb swing high to swing lows and sore thumb swing lows to swing highs. I can bring my Fibonacci retracement tool on from the swing high to the swing low, and you'll see that I do get a Fibonacci level in that area. I get a 382 retracement. Again, Fibonacci's by themselves aren't magical, so I never want to just buy or sell at 382s or 618s or 786s, but we can use them when we look to build a case for entry. So right now we have a little minor level of structure just based off a candlestick, and we have a 382 Fibonacci retracement. Doesn't really tell us much, right? Doesn't really give us any type of confirmation, really no more reasoning that we should sell here aggressively. But as we go down to our lower time frames, we can go to the 4-hour or the 1 hour. Either one will work. Let's go down to the 1 hour chart. 4-hour and daily are pretty similar. If we go down to the 1 hour chart, we will see this. Not only do we have a clearer picture of this structure here, but if we take the top of this wick right here, the top of this move, and we label this X, we're going to have the starting point of what we like to call an advanced pattern formation. And in this particular scenario, this is going to be called an advanced bat formation. Now, I mentioned earlier, Fibonacci's aren't magical. That's true, especially by themselves. At one point in time, I did think so. And again, I learned the hard and expensive way that they weren't. But with advanced pattern formations, they are Fibonacci-specific Fibonacci ratios that when they occur in a certain order can have very, very powerful results. And that's what we're looking at right here. So if we take our swing high to swing low, our X to A, we have a retracement right here. This is going to be our B leg. So let's label this X. This is going to be our A. This is going to be our B. I'll go ahead and throw a C and D on. We'll fill those in later. There we go. We have our X to A to B. We then get another pullback. This is going to be our B to C leg. And for this particular advanced pattern formation, the bat formation, we're looking for a D completion, so an ending point that occurs, if I can drag it, there we go, right at our 886, right? Now, if I zoom out a little bit, and let's say I double click this, nope. Well, I guess we don't need that. We double click this and I thicken this line up a little bit. You'll see that 886 also lines up right with that 382 retracement we drew in earlier. So now we're getting Fibonacci confluence. Not only do we have a single Fibonacci level, but we have a Fibonacci level taken from a higher time frame, lining up with a Fibonacci level from a lower time frame, lining up with a potential advanced pattern formation. And this is what I'm going to be getting involved in with the trade. So again, there's the difference between just seeing something and saying, hey, I like it, I predict this, so I'm just going to get involved, and actually building your case for entering and getting involved off something that is rules based, something that I guess a reason that you know has an edge in the market. And what an edge means in the market it means that if you were to consistently do something over and over again, you would have a positive expectancy, meaning you would finish on the positive side. Think of it as the same way like a casino, right? Casinos make money because they have the edge on all of their games, right? On every single game they play, whether it's roulette or blackjack or the slot machines or craps, right? The odds are in their favor to win. Now, they don't know from person to person if they're going to make money or lose money, but they know if they consistently play the game, they're going to extract their edge. They're going to be the ones making profit. And the average player, the average gambler, is going to be the one that leaves with less money than they came in with. We're doing the same thing in the market, except we're trying to extract that edge. So we're trading strategies and systems that has the edge. Now, it doesn't mean that this advanced bat formation is going to win. It doesn't mean that the next one's going to win. It doesn't mean that the one after that's going to win. But I know, and this comes from back testing and crunching the numbers and really building that belief, I know that if I consistently trade this type of formation over and over again in the market, of course, with a portfolio that I know it works on, I'm gonna be on the profitable side when everything's all said and done. So I'll be looking for a short here on euro dollar at about 110.17s. There's a few ways you can trade this. The simplest way would be to just trade it as a bat formation. But if any of you guys are higher time frame traders and you're looking for I guess a big breakout out of that flag formation, you can keep a partial position on for a trend continuation trade as well. Again, we did identify that we are in bigger time frame, a bearish market. I won't personally be doing that. I don't see any reason for this market to break out. So I think it would be unwise for me to waste money on shooting for anything extended. I'd rather just take my money at my traditional targets and look for the next opportunity. But that is an option, especially for you guys that trade the higher time frame. So that's what I'm looking at here on euro dollar. If you guys want to add anything, the RSI is overbought as well. You can, for you guys that are familiar with CTS, you can add that to your CTS score as well. But for me, the advanced pattern completion is enough that I don't need any other type of confirmation. So hope this was useful for you. Okay, now before I let you go, I am going to throw in some bonus footage at the very end of this video once again. This time it was recorded footage from our live trading room this Friday, where a trader asked me about what was the most impactful trade of my trading career. So if you haven't heard this story already, it's a very good one. It's a very powerful one, and it really kind of changed my thought process and really started that belief cycle. But before we get to that, just want to say thank you so much again for all the support that you guys give. It really does mean a lot. I know it doesn't seem like any one of you can have an impact, but trust me, each time you share this video and are able to reach another trader, it's a massive benefit. And I can't count how many traders that we have that have stumbled across this video because someone else shared it on Twitter. They've gone on to take a training course and are now working for a hedge fund or now working for a prop firm and saying that, man, this is all because I somehow came across this YouTube channel and of course decided to take action and change my life. So that it is very important to us that you guys do that. So until next time, plan your trade your plan. I'll see you guys in the live room or in the syndicate. 12-week members, I will see you Monday, of course, for our private Q&A session. And you guys have a great rest of your weekend. Pip-wise, that was my most profitable trade. It was, but I remember because it was the first trade. It was an advanced pattern formation. It was the first time I actually, I didn't take profits early. Usually I was in the habit of taking profits early. And I didn't for that trade. I remembered it. I remember because we were in the live room. Jason Stapleton had taken the same trade, and I remember it was like a Friday or something like that, and we took the trade, or it was like a Thursday. We took the trade, and we came back the next day, and it had rallied up. Target 1 was like 200 pips away. Target 2 was like 400 pips away. So it was a 600 pip total trade. And the market had, by the end of Friday, it was up like 50 pips. I remember I wanted to close out because I'm like, 50 pips, yeah. And I wanted to close out, but I didn't because I was in kind of like this stubborn mood. I'm like, well, Jason keeps telling me to follow the plan and don't make these mistakes. I'm going to prove him wrong. I'm going to stay in this trade, and the market's going to gap on the weekend. I'm going to lose everything because this is not too long after I had been killed by a gap on euro dollar. Euro dollar gap like 200 pips one weekend, and I got eaten alive. But actually, well, I didn't get eaten alive because I didn't have a stop loss back then. But it opened up, and I stuck with it, and then I got eaten alive because I didn't have a stop loss. But you're looking at we came back Monday, and I guess over the London session Monday, we had rallied up to hit target 1s. And I know Jason asked a question. He's like, target 1's hit. Who's with me? And I'm like, yeah. And it's only like me and like 3 other people. And he's like, you guys aren't excited? And everyone's like, we closed out for 50 pips on the weekend. I remember my roommate was in the same trade, and I yelled out at him. This is back when we played victory music. So I wake up and I'm playing this victory music. I'm like, how come he's not playing any music? I'm yelling at him. I'm like, hey, Dre, we just hit the jackpot. And he's not saying anything back. And he's like, yeah, I closed out for 50 pips. And I remember that being a big lesson. That was the first time I felt like a real trader because everyone else took their 50 pips and was excited about it. And, we took our 200 on target 1. And I'm sitting there like, man, yeah, I'm better than all of you guys. Just because I stuck to the plan, like it paid off. And then a few days later, it rallied up to target 2s, which was another 400 pips away. And I remember Jason made this great point of saying, hey, this is why you trust the plan. You guys were very happy with your 50 pips until you saw target 1 and target 2 be taken out for a total of 600 plus pips. You guys just left 500 plus pips on the table. How many losses is that going to make up for? And for me, that was the biggest, that was kind of like that was the belief. That was the first time I ever believed, or I saw the benefit of sticking with your trade and not taking targets early. And that was one of the last times I've made that mistake. Or at least I stopped consistently making that mistake at that point. So I think that was still probably my biggest trade. I don't think I've ever had I've had some runners, but not 600 pips total. Yes, that was a big one.